MICRON, symbol MU, reported earnings that were above expectations, and the stock has rocketed up in the after hours on Wednesday. Nvidia has been continuously going up lately. Yesterday, the S&P 500 set its 41st record high. You want to listen to YouTubers that say the market's going down. There's no evidence of that as of yet. There could be if we get bad jobs numbers. I think that's the only thing that's going to bring it down. Right now, stocks that provide equipment to data centers, like Micron, which came up with a super memory chip for artificial intelligence, stocks like that are going to go up. And it's going to have a good effect on Nvidia, which provides chips to everyone that is serious about it. I also bought Vertiv Holdings, a favorite of mine, symbol VRT, and they provide data center equipment, notably cooling systems. Micron forecasts upbeat first quarter revenue on strong demand for memory chips. Micron Technology forecasts first quarter revenue above Wall Street estimates on Wednesday, betting on strong demand for its high bandwidth memory HBM chips used by the AI industry, sending the company's shares up 10% after the bell. The company is one of only 3 providers of HBM chips, along with South Korea's SK Hynix and Samsung, which has allowed the U.S. firm to cash in on demand for semiconductors that help power generative AI technology. The AI boom has also helped Micron cushion the hit from a memory chip inventory glut in PC and smartphone markets. The company forecasts revenue of $8.7 billion plus or minus $200 million for the first quarter, compared with estimates of $8.28 billion according to LSEG data. Micron's results typically set the tone for the chip sector as it reports ahead of peers and serves as a broad client base spanning the PC, data center, and smartphone industries. I'm showing you the one-day chart on Micron Technology, symbol MU, just to show you how dramatic it was. At 4 o'clock, about the time they reported earnings, the stock went from about 94 to almost 110. Wow. So I'm not showing any statistics or reporting any statistics right now because those will all be refigured and will be dramatically different by tomorrow. Partly as a result of what happened with Micron, but also an analyst says it should be valued around 145. Vertiv Holdings' intrinsic value is potentially 49% above its share price. Using the two-stage free cash flow to equity, Vertiv Holdings Company's fair value estimate is $145. Current share price of $97.39, it actually closed around 100, suggests Vertiv Holdings is potentially 33% undervalued. Our fair value estimate is 43% higher than Vertiv Holdings Company's analyst price target of $102, which it pretty much hit today. And today, we will run through one way of estimating the intrinsic value of Vertiv Holdings by projecting its future cash flows and then discounting them to today's value. Vertiv Holdings' price to earnings is around 35, which is not bad for a technology company, really, but it's pretty average. But it has a wonderful earnings growth rate of 36%. And looking at the 1-month chart of Vertiv Holdings, you can see that it's had quite the month. It's gone up 28% in the last month, but it was at 90 a while ago, okay? And it dipped down to below 75 this month. And now it's shot back up to 100, and then in the aftermarket at another 1.5, so it's like close to 102 right now in the aftermarket. Its relative strength is 75, which in this case is very positive, and if it was higher, it'd be even better in my mind. Nvidia's been recovering. It's still down 4.5% for the month, but I've been buying it on this dip gradually. I got 1,000 shares. I've been very cautious buying it, where as before, I own like 5,000 shares or more. But now I'm just gradually getting back into it and seeing where this market takes us. I got a 4% stop loss in everything I'm trading now, just because the market, I think it's bullish, but recession is lurking, and we've got to be careful, even though I think the market is generally bullish now. Its relative strength has increased to 58. Which is somewhat reassuring, but it's not overly bullish yet. We're still in a recovery phase, and we got good news with MICRON technology, and that is thought to forecast the future, and hopefully that will come through. The main thing that gives me pause and makes me think we need to watch out for a recession is that September consumer confidence fell the most in 3 years. The Conference Board's Consumer Confidence Index slid to 98.7, down from 105.6 in August, the biggest one-month decline since August of 2021. Respondents' concerns focus mostly on jobs and inflation. Consumers' view on the economy tumbled in September, falling by the largest level in more than 3 years as fears grew about jobs and business conditions, the Conference Board reported Tuesday. The board's Consumer Confidence Index slid to 98.7, down from 105.6 in August, the biggest one-month decline since August 2021. The Dow Jones Consensus Forecast was for a reading of 104. By contrast, the index had a reading of 132.6 in February 2020, a month before the COVID pandemic hit. Each of the 5 components the organization samples fared worse on the month, with the biggest fall coming among those aged 35 to 54 and earning less than $50,000. Consumers' assessments of current business conditions turned negative, while views of current labor market situations softened further. Consumers were also more pessimistic about future labor market conditions and less positive about future business conditions and future income, said Dana Peterson, chief economist at the Conference Board. The last time the confidence index dropped more came as inflation was just beginning a climb to what ultimately was the highest level in more than 40 years. In addition to the steep drop in the confidence index, the present situation measure worsened by 10.3 points to 124.3, and the expectations index was off 4.6 points to 81.7. On the expectations measure, a reading below 80 is consistent with recession. Respondents' concerns focus mostly on jobs and inflation. Those saying jobs are plentiful continued to decline, falling to 30.9% from 32.7% in August, while the jobs hard to get measure rose to 18.3, up from 16.8%. On inflation, the 12-month outlook rose to 5.2%, with concerns over price increases topping the list of economic concerns. So these consumer expectations number can actually be somewhat bullish for the market as long as the jobs numbers don't fall off a cliff. Because these consumer expectations numbers, while they are bad, they raise hope that the Fed will dish out another 0.5 interest rate decrease. But if the jobs numbers, especially the initial jobless numbers on Thursday, come out more than 230,000, that will be bad. And if it's above 250,000, that'll be disastrous. The inflation numbers on Friday, they aren't all that important, except if they drop precipitously, because the Fed is more worried about recession than it is about inflation. A little inflation might even be kind of good. We can't have inflation going down too fast because that indicates a recession going down. So we want inflation to go down, but not too fast. And the jobs numbers are all important. That's the way I roll. Thanks for listening.